Hey guys, my name is Samson Mzera and welcome to today's session, which is a breakout and retest strategy. Now, we usually have a lot of strategies in the market, and we have traders attempting to do quite a lot in terms of strategies like indicators, market structure. But one of the best things I've seen is a trader being able to have multiple strategies to use and multiple tools in the arsenal, to say so. Yeah. So in this case, we're going to be learning about the breakout retest strategy. It's a very popular strategy among traders, and we're going to be covering just the basics. So you're going to know how to identify and anticipate patterns within that context. We're going to look at the entry points and then the stop loss placement and price targets, and then also how do we handle the risk management going forward. So those are the three things we're going to look at, and you're going to look at just the basic market structure concept. So the trick is to try and flow with the market momentum, and we're going to just have a quick demonstration of basic market structure on my notepad, on my document, and then from there we're going to go to the charts. So when you're analyzing a basic trend, usually you have a trend that looks like this, and this is in line with the context of market structure. So you'll find the market usually makes higher highs and higher lows, and for that we've done a session on market structure in the link below in the description. So when you're looking at market structure, usually the market forms highs, lows within that movement. So what you're attempting to do once the market forms a major zone, you're attempting to come back to, you're attempting to anticipate a break back to a level where you can find an entry. So you're looking at prices as they go through key levels, and the assumption is there is a lot of buying volume or sellers volume, such that by the time the market comes back to that key level, it faces some sort of resistance or support for it to continue in the direction. So there are a couple of ways you can look into this, but the one and main thing that you need to do first is identifying key levels on the market. So this is just one of those levels where you have a previous high being your level, and then wait for the market to break, for the price to break through that level. Yeah, so let's go to the charts and quickly identify various types of resistance or support levels. Remember, resistance and support levels are areas on the chart where price fails to break for a couple of times, or key areas in the market that traders will be looking at. So if price goes through those areas, then that's what we're interested in. So the first way to identify key levels in the market, obviously, is by looking at where has price stand previously. So you're either trying to trade a breakout retest in line with a trend, or if it breaks out in a key level. So let's just do that. So here I have a pound USD, yeah, and on my pound USD chart, how to spot key areas in the market is basically where has price touched more than once. So the most basic way to do this is to convert this chart to a line chart, simply like that, and then now you're able to see where prices stand at multiple locations. So from here, for example, I can see that we have that point. So when we convert back to a candlestick chart, you can see that the wicks are filling in that space. So it's good to use a line chart so that you have kind of a rough estimate of what you're doing. So in this case, we have prices standing here, here, and here. So this is a key level in the market that you can be interested in to see what happens when prices break through that level. And then the other thing is, because we've used these points 1, 2, and 3, it's more of, that means it's more of a region and less of a single level on that chart. So for example, in this case, I would want to do this, to mark this out as a region and then extrapolate this going forward like that. Yeah. So in this case, I have identified a support level that eventually became a resistance level. And what have I looked at? I've looked at the three the points previously on the chart where prices just bounced off. Yeah, it's very easy, it's very straightforward. So in this case, then I can afford now to go back to my normal chart, and I can see here we had the market finally breaking. Now there are a number of confirmations to know what is happening here. The first one is you can use volumes, and I know volumes are rarely used on the platform or by traders, but volumes are a good way to know when something is happening at a key level. So if I see a price break like this and it's at a key level and there's high volume, then I can tell that there's a lot of interest here and traders want to really go through with this market downwards. Yeah, so in that case, that's the first way to identify levels. Just look to the left of your chart, see what are the points where prices stand more than once, and then extrapolate that to the future. Yeah, I'm going to look at another chart here. Let's do Euro GBP. Again, always use a higher time frame. Remember what you're trying to do when you're trading the breakout retest method. The first thing is to identify key levels. So the levels are going to help you to know where to look for breakouts and to anticipate those retests that you're talking about. So in this case, I have Euro GBP. I can zoom this out like that. And now I'll be looking at where are the key levels on this chart that I can use. Again, step number one, convert your chart, especially if you're starting, convert your chart to a line chart. It makes your work a whole lot easier. So in that case, if I do that, I can see there are multiple levels on this chart. So if I look at the left, then I can see the first level is here. Obviously, those 2 points over here, 1 and 2. And then we have points down here, like that. And we have points over here, 1 and 2. So what am I looking at? I am looking for key areas so that now if prices go through this point, I want to see a retracement, and that's where I'll be looking to make my entries. Remember, you don't have to make this really complicated. You just need to use a higher time frame, identify key levels, and that's the first thing you're doing. So with this is the first way to identify levels on the chart. So here you have a very clean level, and I will be looking to see how price behaves if we break through it like that. Again, why is it important to use larger time frames? Remember, on the smaller time frames, a breakout can look like a fake out. Yeah, so fake outs is when the market attempts to break out and then comes back immediately. So that's why trading breakouts with breakout retest with smaller time frame is very risky, because most of the times you'll find that price pushes through a point and then immediately comes back past that point. So when you're using larger time frames, it makes it a bit safe, because if, for example, you've taken a whole 4 hours to push up, then traders have already shifted the mindset that it's a momentum move. So at least there are less fake outs on higher time frames than there should be as compared to lower time frames. So that's the first way. Identify key levels and then wait for the price break. And that's the first way to identify key levels. The second way to identify key levels is what we're talking about, which is new highs or new lows forming in a trend. What are the new highs and the new lows forming in a trend? So let me go back to this here and just so assuming you're in a trend, so forming your high, your low, this point over here is what marks your new high. So this will be a key level that you will be watching out for. So what you're trying to anticipate is a break past that level, and then from there now you can wait for your entries at this point over here. So we'll talk about entries in a minute, just covering the key levels bit of it. So in this case, if I see now prices coming back to this key level, that's where my interest arises, and that's where I'll be looking for entry setups. Yeah, so let's just have a look at that on the charts. So this is let's do Euro USD. Yeah, so for Euro USD, going to a higher time frame, let me just clear up this chart. So this is a very clean trend that we can use. So anytime price breaks a new high, so here we had let's just do this over here. We had prices pushing up like that to that point, and then remember from our market structure class, a low is a point on the chart that has broken previous structure. So we'll talk about that in a minute. But so this here, this is a high that I can do, like I can draw like that. So your second low, how to validate a clear low is, just a minute, let me, this one is here, this one is here. So how to validate a low is the point where the market, the base of the move that actually breaks structure. That's your low, that's your key low, yeah? But in this case, you can see that we attempted to break this high at the first point over here. We failed, came back down, then attempted to break a second time. Now, when you broke the second time, that's when you can now have interest on this level. So remember, it's a region. So I'll just try and highlight these tops over here like that. Yeah, so we had that break and then a retracement or a pullback and then another high. So these are all key levels that you should be interested in, like that, and then came back in. So at this point, our key high or our key level is this one over here, yeah, which again coincides with this point over here. So you can just draw a whole line like that. So we pushed up, went down, and then now pushed up. So whenever the market is trending upwards, every time it makes a new high, those are key areas to anticipate. Yeah, so again, back to the structure of this session. We say the first point is to identify key levels on the chart during your trading. Now you're going to look at examples of entry points that you can be using when you're trading a breakout retest. Remember, it's a very basic concept where the market breaks past a certain level, wait for a retracement, and then that's when you start looking for entries. Now, retracement is that action by traders either taking profit or buyers closing their positions or a few sellers coming into the market, but it shouldn't be as aggressive. So let's just have a look at that. This is a good chart to use. So so with me here is a pound USD, and you're going to just go back in time and then just try and sort of backtest the strategy. So in this case, remember, when you have a new strategy, and it's good to have multiple, each scenario calls for a different entry or a different way of approaching the trade. Yeah. So in this case, if we have, for example, an upwards trending market as such, then the first thing is I'm marking every level or every high that the market forms. So for example, here we had prices pushing lower like that, and then we had this pullback like that, and then we had this over here, and then finally we had a change of a trend. Yeah. So once the market broke this previous high, then that's when now we know that we are in an uptrend. Yeah. And in this uptrend, it's very interesting because first off, when the market broke this high over here, so I'll just try zoom this in. So we had this push past this previous key low. This is a key low because it broke previous structure. Remember that from our market structure video. So we had a push, and then we had the market coming back to this region. So you can see it's with this wick over here. So we had, although this is not a very clear retracement on the 1 hour time frame, but we had a candle coming back and then being rejected. Yeah, so we had a push upwards, a rejection from this bearish candle, and then a continuation. Yeah, so I will mark that as my key high. Remember, we also had another key low over here that we can use also as a key high. So that point over there. So when the market pushed past that point, we came back to that key area. Yeah. Once we're back in that key area, this is where you look for your entries. Now, you can have two types of entries. You can either use, you can look for candlestick rejections or engulfing patterns. So let me just, so a candlestick rejection, and this will be in our patterns video, is when you have such a candlestick forming on your chart. So if you have something like this, yeah, so in this case, you have the market attempting to go lower, and then we have that price rejection. So if you've learned how to read candles, and I think it will be covered also, link in the description for candlestick formations, this shows that price has refused to go lower, or traders have refused to take this price lower. So I can supposedly draw a key level like that. Yeah. So if you see this on a key level, it's a clear indication of rejection from going lower, and there's a high likelihood that the chart is going to continue, or the market is going to continue in that direction. And the same can apply in a bearish market. So this is what we are seeing here on the on this level over here, which is a rejection. Let me just zoom this in. So you can see that we clearly have a rejection. So we pushed higher, had a rejection on this key low. Yeah. So on this key high, it's a key high because it's the base of the move that broke previous structure. Yeah, like that. So this is where we had a price break, and this was the origin of that move. So this is a very key level that we finally broke structure, had a rejection at that level, had a continuation. So that's one way to trade a breakout and retest, is by looking at what types of patterns form when the price comes back to those key levels that we have learned how to mark. Yeah. The second pattern that you can be looking for is an engulfing pattern. So an engulfing pattern will look something like this. Just a minute. So we'll have a bearish candle, for example, a small bearish candle, and then after that, what happens is, because sellers had attempted to sell the market, and they failed, then buyers come in and take the market higher. So you can see we attempted to go lower, and then buyers came in and took it higher. So if you see this type of reaction around a key level, it's more of a confluence of the probability of prices going higher. Yeah. So there are various market patterns you can use, and this is just a few examples that you can attempt. So in this case, let's see what happened on this chart. We moved higher. Here we moved higher, broke this key area, because this is also a key level because it was the base of a move that broke structure. So this is a key level here. We moved past it, yeah, and then what happened? Came back to that key level, yeah. At that point, we see that a very interesting pattern here. I'll just zoom this in. So when we came back to this key level, number one, note how the candles are getting smaller and smaller. So one of the ways to validate also that your breakout and retest is going to work is, if you're in an uptrend, you need to see weak selling pressure. If the selling is very strong, then it might invalidate that level because the sellers might have momentum. But watch how on our up move or on our impulse move, we had big candles, but on our retracement, we have very small candles. And then finally, we had the buyers coming into this market with this bullish candle. So this can be a good point to be interested becoming a buyer in this market. Yeah, and we failed again to go past this point. So look at the second retracement here. We failed to go past this point over here. So that tells you, again, buyers are supporting this market. We're probably going to continue going higher. So this point over here, our new level, just a minute, let me zoom out. So I'm just going to extrapolate this level so that we have very clear examples. So the next high was that one. Yeah, this high is what led to this push upwards. But now take a look at this push here. So you said this one worked out quite well. This one we had a lot of momentum on the break, but we also had quite significant momentum lower. So in this case, again, we had sellers coming in, this very large candle, sellers coming in, and then once we were at that level, both the buyers and sellers had very small candles, number one, and they were indecision candles. So this one will have been a very hard trade to pick if you're only doing breakout and retest. Yeah, so in this case, you will have invalidated this setup on the basis that there was no pattern on this area for you to use as a continuation. But now you have a new key high, and that is over here. So you can again mark this level like that, and then now wait for prices to move back up. So you're not always going to find precise entries exactly where you want them at, but in most cases they do occur around that level. When we have strong selling pressure, again, here we've marked a new key level, we've broken higher and then it came back lower like that, you need to wait for signs of buyers clearly being stronger than sellers, because we are in an uptrend. And that came at this big candle over here. Remember, all these candles were small. There was no bullish candle, just small indecision candles, and they were around this area over here. Yeah, so again, it's a zone. Sometimes it can be a point, but most of the time it's usually a zone. And you can see there are very small candles over here, and then finally we had signs of buying again. Yeah, so this makes your entry valid because it's a candle that is bigger than the other candles, and it shows bullish momentum has come back into the market. So that will be your entry point or entry opportunity over there. Mind you, you're still marking your high like that. Yeah, so you've marked this high, you'll wait here. You didn't have a retracement. Again, we didn't have a retracement. And then watch how this behaves over here. Is we start having strong selling again. At the sign of strong selling, you probably will be very careful trading that market if you start seeing very huge candles, very strong selling in the market. Yeah, okay, so then we converted to a downtrend. How do we know it's a downtrend? First off, the sellers came in. This was our last key point over here. This is the base of the move that broke structure. Yeah, so this is our last key point, our last key low, and that was our last high. So it's either prices go past this point to change the trend, or we continue going past this high for a continuation. Yeah, so in this case, what happened? We went back to this key low, failed to break, but eventually we did have a break. Yeah, over here. So look at the sizes of the small candles vis-a-vis the buying candles vis-a-vis the selling candles, and you can clearly see that we have very big bearish candles now that it's a clear downtrend. And then on the retracement move, you can see very small bullish candles again. Now here it can be a bit complicated because this is one big indecision candle. You can have the leeway of going to a smaller time frame to check if you can see any patterns over here before deciding to continue with this trend. So yeah, so most of the times a breakout retest is very effective, and it's your first line of defense, or it's your first entry strategy whenever you're trading a continuation of a trend. Yes, you can use Fibonacci, you can use supply demand, but the basics of breakout retests can really help you with your trading if you just get the basics right, and if you know what you're looking for in terms of key areas of resistance or support. So let us quickly go through what we have done. The first thing we have done is identifying key areas, and that is number one. You can either identify it from looking at the left of the chart and seeing where price has touched multiple times, or you can identify key areas as new highs in a continuing market, or either in an uptrending market or a downtrending market. And then we've also checked out how to identify entry spots around those key areas. You can have key patterns like rejections or engulfing, bullish or bearish engulfings. Now, what about the risk management? Let's go back to these trades we've had over here. Yeah. So the idea is this is a momentum entry trade. So at the first onset of a reversal, let's have a clear one. Let's start from here. On the onset of a retracement, the assumption is because the price has rejected, or because the market has rejected, so I'm talking about this point over here, because the market has rejected this entry over here, we don't expect it to come back here. So when you're placing your entry, your stop loss should be immediately below that key candle that you have seen. So if, for example, I decide to enter long here because of this rejection on this key high that now has become a resistance, then a support, sorry, then immediately below here is where your stop loss should be. Why? Because it is a momentum entry, and the assumption is that momentum should continue. If it doesn't, then the whole setup is invalidated. Yeah. Another entry point we have discussed, was it here? Just a minute. Yeah, so you say this was also the base of this move that broke this low over here. So this can also be a good region. And in this case, let me just quickly change this. you can see that first off, we had small candles, as we said, and then the onset of momentum coming back to that mark. And it doesn't have to be precisely on the line. It can be around that point because support and resistance is a zone and not a specific point. So on the onset of momentum coming back in, the assumption is we don't expect us to go back down from here. Yeah, this already in itself shows us buyers have come into the market and they should continue with that trend. So if, for example, we see prices coming back past this candle, then it invalidates the whole setup because it no longer is a momentum trend. And that's what you need to be very careful about. So your stop placement should be immediately below your key candle on the charts. Yeah. Okay. So to sum it up, we have done key levels. We have identified how to validate breaks and retracements. The retracements have to have low momentum or low pressure, while the breakouts need to have big candles and a lot of momentum because you're looking for momentum entries. Then we've talked about entry points, identifying entries. And this is areas on that resistance level where buyers seem to come back into the market, and they can either come back and show you in form of an engulfing candle, a rejection, or any pattern that suggests momentum on the buyer side or on the trend side has come back to the market. And then our stop placement is immediately below those levels or those key patterns. For example, the engulfing candle, immediately below it, that's where you place your stop. So those are 4 clear points, and that's a very straightforward strategy that you can try it out on your own. And that is the conclusion of our session. Remember to like, share, and the links are in the description. Also, we have a playlist, so you can continue down this playlist to know what other strategies or tips you can use. And having said that, thank you for watching.